Professors FM.
I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode is on how financial settlements and judgments from court cases can generate tax benefits to the party paying such damages.
Over the past 20 years, high-profile court cases have produced large judgments against corporations or have been settled out of court for large sums of money. Examples include BP, Boeing, Fox News, and several producers of prescription opioids. In today's episode, we discuss the potential tax benefits these payments can generate for the companies that pay them. Hello, Lisa.
Hello, B.
Today's episode continues our recent discussion of the taxation of financial settlements and damages from court cases on our last episode.
That would be the episode where you bemoaned how a car accident in college preemptively killed your career as a concert pianist.
It was, and I stand by that story. It was very traumatizing to me to have my dream shattered by a careless driver.
Or lack of innate or learned ability.
Not engaging on that. But your reminiscing about our last episode does raise the question, what type of art or skill did you dream of performing on the world stage? And let me request that it not be about cheese making or cheese selling or cheese eating.
Man.
Or cheese photography.
You just stacked the deck against me there.
I did.
It's also a tough question, and not only because you said I can't talk about cheese, it's also a tough question to answer because I have extremely severe stage fright.
Okay.
And so doing anything on the world stage sounds terrifying to me. But maybe before I realized I had such severe stage fright, I always dreamt of being a gymnast.
Really?
Really?
I did not realize that you took gymnastics as a little kiddo. That is cool.
Oh, no, I didn't take gymnastics.
Oh
God,
okay.
no.
Sorry. Okay. Assumption.
No. In addition to being afraid of stages, I'm also afraid of breaking my neck.
Fair enough.
So I am not a very good daredevil and not much of a gymnast. No, not at all. No.
Okay. So this really was more of like a pie in the sky dream as opposed to something rooted in reality.
As opposed to your dream of being a concert pianist?
Not engaging. Okay. So our goals for today are to explain when and how paying a settlement or judgment could trigger tax benefits for the payer, and when and why they may not.
Okay, so this is super intriguing to me because you're talking about tax benefits.
Yes, from doing something wrong.
Yeah.
I am.
Okay.
Yep.
So let's quickly recap what our last episode talked about. We're still talking about damages here. These are payments made by a party that has committed some sort of wrongdoing to compensate the wronged party for being wrong. Wrong. A payer can offer damages in the form of a settlement in order to stop a lawsuit, or a court can order the person found liable for the wrongdoing to pay the wronged party.
And while we talked about the tax treatment of these payments to the recipient in our last episode, today we're focusing on the tax treatment to the payers, particularly the big businesses that have recently settled lawsuits like Fox News, Bayer Monsanto, and a quartet of companies that manufactured and distributed the opioids oxycodone and hydrocodone.
Okay, so let's start with general rules for business taxpayers because that's who we're dealing with here, right?
Yes.
It's long been the case that ordinary and necessary expenses that arise in the course of business are deductible to businesses under Internal Revenue Code Section 162A. Yes. That means businesses get to reduce their taxable income by the amount of those expenses. So if a settlement or judgment arises in the ordinary course of business, the business should be able to deduct those expenses according to Section 162.
Very true. But it has also long been the case, since 1969 in fact, that taxpayers cannot deduct fines or penalties paid to a government for violating local, state, or federal laws. And that is under Code Section 162F. I always liked that because it was F for fines. It made sense to me.
It does make sense. And that disallowance of the deduction also makes sense,
it
right?
Does.
These tax deductions provide a tax benefit to taxpayers by reducing the amount of income that they have that gets taxed. And so it therefore reduces the amount of tax that they have to pay.
Yep.
So providing a deduction for fines and penalties would start to pretty much negate the entire point of the fine or penalty, which is to punish the taxpayer for doing the wrong.
Exactly.
This is formally known as the public policy doctrine, and that we shouldn't allow deductions for payments that violate public policy.
It all sounds good. Subsequent Treasury regulation and guidance extended the non-deductibility beyond penalties in criminal cases to also include punitive penalties in civil cases as well.
And on the flip side, the original Treasury regulations provided an exception to the original rules that said fines and penalties are non-deductible. So an exception to the non-deductibility exception.
Oh, love this.
Yeah.
Yeah.
So specifically what's called compensatory damages that are paid to a government don't constitute a fine or penalty according to the Treasury regulations. And compensatory damages are those intended to compensate the government or the wronged party for the scale of the harm that was done. So for example, a company could be subject to both a fixed punitive fee for violating environmental protection law and a fee intended to help remediate the effects of their wrongdoing by tying the fee to the size of the environmental damage. That second piece seems like it was carved out by the regulations as compensatory, and that would make them deductible.
Okay, so the key point here is just because you make a payment to a government because you did something wrong, that payment has to be categorized somehow.
Yes.
If it is categorized as a fine or a penalty, then it is not going to be deductible.
Yes.
But if instead you can categorize it as compensatory in nature rather than being punitive in nature, then it will be tax deductible.
Exactly.
Interesting.
Under some laws, the government can recover actual damages sustained and even court costs from the guilty party. And guess what? These amounts aren't fines. They aren't penalties.
Nope.
They can be considered compensatory in nature, and therefore they can be deductible by the payer.
Okay, so that was really logical.
Yeah.
I like it.
Okay.
Episode over?
Not so much.
Okay.
There were a lot of arguments in the courts over whether payments to governments in judgments and settlements were deductible or not. And I bet you can guess who argued each side.
Okay, let me see.
Yeah.
So I'm going to guess that taxpayers argued that most payments were compensatory in nature and therefore deductible, whereas the IRS argued that most payments were punitive in nature and thus non-deductible.
A plus.
Very nice.
Many, many, many court cases hash this all out, leading one group of tax practitioners to draft an entire article about the provision in the Florida Tax Review titled, quote, Beyond Frustration.
I like that title.
It was longer than that, but it started with Beyond Frustration.
Okay, I like it. Colon, something, something, something. Okay, say more things about, let's talk about frustration. Say more things about frustrating tax laws.
All right. Well, the original language of that 162F disallowed any deduction for a fine or similar penalty paid to a government for the violation of any law. And that may sound really clear at first.
It didn't.
Okay. Good. Because the language leaves a lot of areas open to question. There's a lot of gray in here.
Yeah, I'm gonna guess similar penalty.
Yeah.
Okay,
what
talk about that?
Penalties that are similar to a fine versus penalties that are not similar to a fine. Like, to me, they're synonyms.
Yes.
Yeah.
Okay.
That's a good place to start.
Go on.
Does the taxpayer have to actually have been found guilty of the violation of a law? Or does the provision deny deductions for settlements made by a taxpayer before there's even been a finding of guilt, which is often the way settlements work?
Absolutely.
Yeah. Okay. What about government agencies like the Securities and Exchange Commission or the Environmental Protection Agency? Are they governments?
Ooh, is an agency of a government or a separate thing?
Yeah.
Okay.
That's one for a law nerd for you.
Yeah.
And in some cases, taxpayers have gotten the government to allow them to instead, for example, say, donate the amount that would have been a fine or a penalty to a qualified charity.
And then I can call that a charitable contribution.
It sounds that way because it's not a fine or penalty paid to the government.
Ooh, wow. Okay, this is spicy.
Yeah.
These are lots of really good questions.
Yeah.
I didn't know this was going to be this interesting.
Okay.
I was curious about how all of this has played out. So I looked up some big cases.
Okay.
Do you remember the BP Deepwater Horizon oil spill in the Gulf of Mexico in 2010?
I shouldn't be laughing. It was terrible. But yes, I remember. You and I were living in a Gulf state in 2010.
We were. Good memory. Well, BP was sued, maybe not surprisingly, by the U.S. federal government and 5 U.S. states.
Including Texas.
For good measure. And they were sued for violations under the Clean Water Act.
You don't say.
Very logical. And also the Oil Pollution Act.
Which I didn't know was a thing, but it should be.
Absolutely. So BP settled in 2015 with all parties for a then record settlement of about $21 billion.
Okay, and did they get to deduct it?
Well, we don't know for sure because we can't see their tax return.
Right. Okay.
But we're going to speculate that they probably got to deduct most of it.
Wow.
And here's how we got there. So the Department of Justice press release about the settlement indicates that only about $5.5 billion was technically considered a penalty.
Oh, okay. So they actually specified that.
Yes.
Okay.
And so that word penalty is helpful and suggests
Sure.
that part of the payment was probably not deductible.
Right.
Except that 80% of the quote unquote penalty was said to be going towards restoration efforts.
Uh-oh.
Meaning that BP could have reasonably claimed that 80% of that 5.5 was deductible because it was compensatory. So
Wow.
they didn't have to pay that because they were being punished. They had to pay it to fix what they had done wrong.
Right.
Most of the rest of the payments were considered natural resource damages and reimbursements of federal and state costs to mitigate the disaster and pursue those violations. So once again, all of those are amounts that BP could reasonably claim are compensatory in nature rather than fines or penalties.
Okay, so my head is spinning here. I have to do the math here.
Please do it.
Okay, so it was about a $21 billion settlement,
Yes,
you said.
did.
We think maybe only 20% of the $5.5 billion penalty
It was labeled as a penalty.
right,
Yep.
was non-deductible. So $19.7 billion in tax deductions that reduced the cost of the settlement to BP by $7 billion under the old corporate tax rate of 35%. So instead of paying $21 billion, BP really only had to bear the cost of about $14 billion after getting those giant tax deductions.
And I don't know about you, but I would rather something cost me $14 billion than $21 billion.
I mean, I'd rather not spill oil and pay nothing.
Okay, well, now you're just being
But
ridiculous.
here we are. Interestingly, Boeing took a different tack.
Okay.
So back in 2006, it entered into a $615 million settlement agreement with the Department of Justice over government procurement fraud.
Okay.
The Department of Justice's press release indicated that only $50 million of the settlement amount was a penalty, meaning Boeing could have tried to deduct the remainder. But once people realized this, Boeing went ahead and publicly announced that it would voluntarily not claim a deduction for the settlement amount, claiming that its reputation was more important than nearly $200 million of tax benefits.
Okay, so anytime that taxpayers are volunteering to give up a tax benefit, I think that's a pretty good indication that the tax law is full of holes. It's looking kind of like Swiss cheese.
You said cheese.
Oh, damn it, I did. How did I let cheese back into this episode? Okay, focus. Now, BP and Boeing are just two examples.
Yeah.
And they go back quite a few years.
Yeah.
2006, 2010. So this has been an issue for a long time. But surely in these intervening years, someone has tried to do something about this and give us a little bit of clarity. Yes?
I don't like it when you call me Shirley. Yes, enter our favorite little tax law from 2017.
The TCJA.
Uh-huh.
To quote the original Top Gun movie, God help us.
Well done.
So we've established that the tax law around deductible settlements and judgments is, shall we say, a big fat gray area.
Big fat gray area.
Taking these issues to court, of course, imposes costs not only on taxpayers, but on the government in determining the tax treatment of these payments. And a little more clarity in the tax law itself could potentially sidestep many of these issues and save everyone time, headaches, and money.
All of this uncertainty is exactly the idea behind some draft language that's actually been around since 2003 and finally got passed into law with the Tax Cuts and Jobs Act of 2017.
I didn't realize it had been around since 2003.
I mean, people have been pitching many ideas for many years,
Yes.
but yeah, almost exactly the same language.
Okay.
Yep.
So I did know that, yes, the TCJA finally amended the provisions in an attempt to provide some clarity over at least some of these issues. The new provisions made several major changes. So first, the provisions clarified that the non-deductibility rule can apply to any payments.
Oh, snap.
not just fines and penalties.
Okay. I mean, I guess that's an improvement because now we don't need to figure out if a payment is for a fine or a penalty similar to a fine, but it seems like it maybe just opened up a giant can of worms. Go on.
Okay, so exactly. Second, the non-deductible payment can be made directly to a government or government entity or at the direction of a government or a government entity.
Okay.
So that clears up both the SEC and EPA question as well as the donation in lieu of a fine question.
Got it. Okay.
All of it, absent a clear exception, is non-deductible.
Okay, that seems helpful.
Very helpful.
Okay.
Third, the new provisions added specific exclusions in an attempt to clarify what sorts of payments would qualify for a deduction.
Okay.
These include payments made in private lawsuits, because technically a court-ordered judgment in a private lawsuit would be paid at the direction of a government.
Okay, sure. Yep.
So those still get a deduction.
Fair.
So do tax payments, which are payments made to a government, but not the intended target of the non-deductibility provision.
Right. Okay. Are you sure this was passed with the Tax Cuts and Jobs Act?
I am, yes.
It just, this stuff seems surprisingly well thought out for provisions of the Tax Cuts and Jobs Act.
I agree, and I wouldn't have had an answer except for the fact that you just said this has been floating around since 2003.
Oh, yeah. That makes more sense. Okay. Continue.
Okay, so the last exclusion is the big one because it continues to allow deductions for compensatory payments.
Okay.
But now it defines those as, quote, certain amounts identified in the order or agreement as paid or incurred for restitution or remediation or to come into compliance with a law.
Okay, so compensatory payments are those made for restitution or remediation. Let me pull out my Merriam-Webster.
Yes, so I said they defined it. I didn't say that they defined it in plain English that anybody can understand.
All right.
But what's even more important in that clause is that the amounts must be identified in the court order or agreement specifically as one of these deductible types of payments. So now we are to a place where it does matter what it was called in the settlement agreement because that is going to drive whether those payments are deductible or not.
Yeah, so that's super interesting. We basically now put it in the hands of the court or the settlement agreement to figure out what's deductible at the time that these amounts are decided upon. And that kind of makes some sense.
And to your point, it's making things easier and reducing some of the cost and the time of the taxpayer and the IRS fighting about what's deductible or not. And it's long been the practice, given the lack of clarity in the original pre-TCJA law, for government agencies to put language into settlement agreements, specifically getting the taxpayer to agree that they will not deduct certain amounts.
Oh, wow.
So as to make those payments more punitive. So, for example, the SEC put it in their agreement with Tesla and Elon Musk that Tesla would not deduct its $20 million settlement payment related to Musk's 2018 tweet, indicating an intention to take Tesla private. So this is something that was done in the past, but I imagine we're going to see a whole lot more of it now because how you describe it drives the tax treatment.
Yeah, and I will say it obviously wasn't done across the board in the past either because of the Boeing example we just discussed, right? The Department of Justice could have made it part of the agreement with Boeing that they couldn't deduct it, which would have negated Boeing's ability to make that decision themselves. So this sort of enshrines into law that a best practice will be for government agencies to specifically indicate which payments are deductible and which aren't anytime they're, dealing with these sorts of wrongdoing corporations.
And if the parties forget to include the language, it seems like the default rule is that all amounts will not be deductible by the taxpayer. Is that your read on things?
I think so. Yeah. I mean, so it's potentially in the best interest of those taxpayers paying the settlements and judgments to pay a lot of attention to getting the language they want in these agreements as well.
And it also seems like this now is like it's a bargaining chip too. Like, I'm going to agree to a bigger settlement if you make it tax deductible.
Sure.
I'm going to agree to a smaller settlement if you're going to call it a penalty.
Yeah.
And that's great because we don't want the attorneys out there to run out of things to do. Okay, it's time for the good, the bad, and the ugly.
Okay.
I don't know that I want to say this out loud, but did we just find something that we think the TCJA did right?
Oh, wow. Yes. I think you're right.
What are we mad about here?
God, we really need to do this on video sometime because the look on your face is priceless.
I never thought the day would come.
Yeah.
Okay. We did it.
Surely there are other things the TCJA did okay. Okay. This. Yeah.
That. And the other thing. Mm-hmm. Okay.
No, I think clarifying the old language was important, and it makes a lot of sense to put the onus of whether something's deductible or not on the writers of the court order or settlement agreement, so that we all aren't wasting all our time and energy trying to figure out what they intended.
100%, because who knows better
than the writers
at the time of the agreement?
Yes.
So 100%. I think I feel better now because you said it yourself. This was not language that was crafted
by the TCJA.
Yeah. This has been around for 14 years before that. So, okay, now it makes sense. The universe is back in order. Thank you. Proceed.
Okay. I'm going to move on to the bad.
Please do.
There's still a lot of settlements and judgments that are deductible to corporate taxpayers. And I'm not talking just about restitution and remediation, whatever those words were, of payments to governments and governmental agencies. But like, we haven't even talked about private lawsuits except in passing. Like, all of this episode has been about payments to a government or to a government agency, right? Or made at the direction of them, even if you donate it to charity. This isn't somebody sideswiped you and is liable.
Poisoned you.
Yeah.
Made a product that gave you cancer.
Yeah.
No, you're right. So there's a whole class of settlement payments that are deductible when paid to a government agency. There's an even bigger class of settlement payments that are going to be deductible when paid to private individuals or in private lawsuits. And that could be problematic because people don't like that. So, for example, a poll released by the U.S. PIRG Education Fund says that most people disapprove of the fact that businesses get tax benefits for legal settlements.
Yeah, you don't say. That doesn't surprise me at all.
I mean, it really doesn't, because if you make a mistake, why should the government bail you out of that by letting you reduce your tax liability?
Yeah.
Unclear to me.
And back on the subject of today, the payments to governments, you know, even the new law leaves a whole lot that's subject to deductions, right? Anything that's restitution or remediation or to come into compliance with the law. Basically anything that the agreement says isn't a penalty or fine is still deductible. And that seems to be against sort of what most people would want.
100%. I guess if you're trying to take a pro-business stance on this, you go back to where you started the episode, which is Code Section 162A.
Yeah.
And 162A says that ordinary and necessary business expenses should be deductible.
Yes.
So I think that raises the really important question of, should it ever be, quote, ordinary and necessary to commit some sort of wrongdoing, libel, fraud, whatever it is, that's going to get you in a position where you have to make a big payment to a government agency or to a private entity.
And I'm so glad you brought this up, because it gives me finally the motivation, the reason to talk about Fox News.
Oh, can I take it back then?
No, I think this is an important point.
Okay.
Because so some of you may be aware, Fox News entered into a settlement agreement with Dominion Voting Systems for almost $800 million after Dominion sued Fox for broadcasting false claims suggesting that their voting machines fraudulently helped Biden win the 2020 presidential election.
Yep. All right.
This is a big deal.
It is.
There was an attack on the Capitol over this sort of stuff. And the settlement happened after the court ruled that Fox had made false claims. So we don't need to say allegedly here.
They did something wrong. They were
found by the court to have defamed
violation of
this
the law.
Technology company. And it begs the question, if they're found guilty of this, if they've admitted to telling lies about Dominion and they were ordered to pay this money, is it ordinary and necessary? Should they be allowed to deduct it?
It's a great question. And I'm thinking that you have an opinion on whether in this specific instance for Fox News, whether defamation is ordinary and necessary.
Well, I don't even need to have my own opinion. I'm just going to quote Dan Shaviro from NYU Law, because I think he nailed it.
Okay.
Quote, if your business model is to tell lies so that you'll get viewers and have lots of advertising revenues, then odious though this business model may be, the tax system's job is to tax you on the profits that you actually make from it. And those profits are indeed reduced when you are successfully sued by the victims of your malicious falsehoods.
It's so bad.
I think his point is that maybe your business should not be to tell lies.
I agree.
Yes.
Let me clarify. His quote is not so bad. What is so bad is that somebody could
make the claim
that
that this is our business model. And so this is an ordinary and necessary business expense, and it's going to generate a giant tax benefit for Fox News.
Okay, I think I'm depressed.
Can we go back to talking about cheese now?
I think that's for the best. Let's do that.
Let's go drown our sorrows in some massive burrata.
Burrata. It's our cheese.
Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.